Hello and welcome back to another Hola Prime futures training video. My name is Chris Lewis. I am the head futures trainer here at Hola Prime Futures. And in this video, we'll talk about some very basic concepts, key terminology for futures traders so that you can learn to speak the jargon and understand the very basics of the world that you are trading in. Okay, so you can see that I have the Project X platform up, and the first thing you'll notice is nothing's moving, and that's the first term that I want you to be aware of. It's not the weekend. The markets are technically open, at least for the day, but there's an hour that starts at 4 o'clock in Chicago, 5 o'clock in New York. Well, they do what is known as settlement. Now, settlement can mean a couple of different things, but in the case of what you're dealing with, it is a cash settlement. It is more or less a time of the day that they match up the orders and decide that trader A owes trader B or whoever $1,700, and this one may owe $2 million, and this one may be expecting 800,000. Whatever the situation is, this gives the exchange the ability to move payments, because you must understand that retail traders aren't going to have any type of credit. Basically, you have an account, and if you blow it up during the trading session, then it's gone. You don't have to worry about this, but that's why the market closes for an hour. Furthermore, you can also start to talk about the other types of settlement, which, of course, the first one is physical that you can think of. Now, physical is basically, for example, if you buy oil and you want to take physical delivery, that is a settlement as well. You go to Cushing, Oklahoma, they drop off a certain amount of oil, you get the contract, you pay for it, or the exchange is financially done ahead of time, I would assume, and then you take your X amount of barrels of oil away. Again, not something you need to worry about. This allows the futures markets to basically mark to market. So when you see at the end of the day that oil was up 1.6%, well, what they mean is at 4 o'clock in Chicago, the futures markets shut down. They were 1.6% higher than they were the previous day. The next thing is tick size, and tick size is going to be based on the contract that you're trading. So for example, I have the Russell 2000 in front of you. It happens to be a $5 tick size. So every time we move, it's $5. This is different for most contracts. For example, gold is 10, micro gold is $1. So $10, $1 difference. Remember, the micro contracts are a tenth of the size of the full contracts. The S&P 500, the ES, the E mini S&P 500, the one that most commonly is traded, is $12.50. Natural gas is $10, unless, of course, you're trading micro natural gas, which is $1. The currency markets, a lot of them are $6.25, but it just depends on the one you're dealing with. If you have any questions, the information can be found on the CME Group website. It's very easy to find, very common. For that matter, you can just Google what is the tick value in CL, for example, which would be the light sweet crude oil market. Now, commonly used interchangeably with tick value is point value. You'll see that, tick size, etc. They're all the same thing. It is worth noting that a tick is just the smallest amount an asset can move. So in the case of the Russell 2000 here, it is a tenth of a point. It is going to be different in other markets. So for example, let's go to silver. Silver will be different. And you'll notice it's half a cent. So $37.62.5. One tick higher is $37.63, and so on. Leverage is something that is determined by the exchange and not Hola Prime, and it does change. So understand that leverage is just the amount of an asset you can control for the margin that you put up. So margin being, for example, $2,000, and you get to control $20,000 worth of something, that would be 10 times leverage. It's a lot like the Forex world. It's not any different really. The only difference here is Hola Prime does not have the ability to change the margin. It is determined at a central exchange. So, for example, sometimes when a market really takes off or really melts down, they will increase the margin because of the fear of disaster for blowing accounts out. Remember, every time you buy something, there has to be a counterparty, and they don't want people blowing up left and right and have some type of major financial crisis on their hands. So margin, again, you can find that at the CME Group. They will be very prominently listed per asset that you're looking at. So for example, if you're looking at copper, it'll give you all of the latest information on that website. The biggest thing to take away from here is that not only are there key terms, but again, they are somewhat interchangeable. So for example, tick size, point value. I've heard point size. I've heard margin. I've heard dollar per tick. There's just a lot of different things that you hear, and you find out it's really only a couple of things. And again, all of this information is on the CME Group website, and I do encourage you to look at it because, quite frankly, if you have, in this case, a $50,000 account, well, you only have $50,000 worth of margin, and you may find that, for example, silver asks quite a bit right now, and maybe more than you anticipated. So CME Group Financial Services, you can go to there and you can see that you're on the website. So let's go ahead and take a look at the markets, and let's just take a look at corn. Why not? So the overview, it tells you that 350,000 contracts are traded per day. It is the most liquid and active market in grains in the agricultural section. You click on margins, and it will tell you maintenance margin is $1,050. So at this point in time, that is your margin, but you can also see that it just depends on when. You can see how it's gone up. It was 600 at one point. You can look at specs, and it'll give you each contract is 5,000 bushels. It's in US cents. The times it's open, the letter codes, you'll be looking at CME Globex. There are other routing possibilities on other platforms. You can see that it goes through the price limits. This is something a little bit different in futures. There are certain limits on particular products that they will shut down the market for a certain amount of time. So for example, if you are looking at, let's just say block cheese futures, very bizarre and out there type of market, but you can see 7.5 cents gets people the current daily price limit, and they will shut it down. And each market is a little bit different. It'll cool it off for 15 minutes in some cases, and other times they'll just shut it down for the day. It just depends on what it is. Let's find a little bit more common one. Okay, so this is your reference price for enhanced delivery futures. Again, that's not you. Micro gold futures, you can see that depending on the month, these are the reference price, and where you have a circuit breaker. Again, depending on the market, the circuit breaker does change. Equity index, this might be a little bit more easy to read. Let's see. So the 2000, let's just do these are all the growth index. These are some of the smaller ones. What you want to find is the actual major industrial average index futures for the Dow Jones. That tells you all the levels that they will stop it out if it hits. It changes every day. It's a certain percentage, So you don't really need to know that. But the one thing that you don't want to do is get caught in a position where you are limit down or limit up and you're on the wrong side of the trade. That limit gets hit, it kicks off the circuit breakers, and there have been times in the past, very rare, but it does happen, where a market goes limit down, for example, whatever that happens to be, maybe 7% that day. And then the next day it opens up limit down because there's a flood of orders. You do not want to get caught in that, so do be aware that it can happen. Very, very unlikely to happen. And of course, there are some protections on the platform. So going back to the platform, you will see when you enter a position, it will say ask price, bid size, blah, blah, blah. You can change the DOM to show P&L column or hide it. It'll say, and for example, silver, it'd be $25 each time. So it'll say 25, 50, 75, 100, and so on. And just make sure you know what you're getting into before you start pressing buttons. It's very easy to find all of this information. It's all on the website, and you can reference that to get all of the latest information for the products that you are trading. You should get used to using that website. It's a wealth of knowledge, and it will guide you through your journey as a futures trader.
Hola Prime, trade with transparency.